You learn that lesson pretty quickly. But guess what? Success is a lonely road. Success in anything worth having is tough. The only difference with trading is that we spend too long being so easy. You learn that lesson pretty quickly. But guess what? Success is a lonely road. Success in anything worth having is tough. The only difference with trading is that we spend too long being sold the dream. We focus on the dream rather than trying to understand the reality. So let's remind ourselves. Trading isn't something you're going to become profitable with overnight. It takes hard work, dedication, and perseverance. Ignore the snake oil salesman telling you of get-rich-quick, holy grail, press score, and profit systems. They don't exist. It's a false dawn. Sorry to burst your bubble, but I told you, we're focusing on the reality now. So what makes a great trader? Someone who has grit and determination. Someone who focuses on the long term and isn't constantly searching for short-term wins. Someone who knows what they want in life and isn't afraid to work for it. Someone who can endure the long, lonely hours, working on their own, sometimes without any tangible gain. Someone who can go to bed and even if they toss and turn all night worrying about their previous day's performance, can still get out of bed the next day with a hop in their step and get back to work. You see too many traders give up too quickly when the reality hits them. We can all come out of the blocks at full speed with all the enthusiasm and conviction in the world, but there's a reason the stats show only a minority of traders end up successful. Because once things get tough, people give up. As soon as it becomes obvious that it's not smooth sailing, that you can't just cruise to the finish line, people make all sorts of excuses about why trading isn't for them. It's a scam. It's gambling. It's only for institutional traders. You need too much money. Once again, who said it was going to be easy? Trading to become a success in any profession takes years of hard work. Trading is no different. It's just more accessible. We're talking about a market making trillions of dollars daily. And if you're willing to work harder than 90% of traders, you can carve out your piece of that. Just carving out your own small section can lead to the most fulfilling experience of your working life. That's what this is all about. Starting with something small, insignificant, and turning a number into something tangible. The ability to treat yourself and those closest to you to a better lifestyle. No more financial pressure, more security, more certainty. But besides that, the feeling of knowing exactly what you're doing in a challenging role. To wake up in the morning and know you've got your finger on the pulse of the entire world, the global economy that keeps everything ebbing and flowing, and you're an integral part of all of that. A knowledgeable trader, an investor, and an entrepreneur. You're part of an important group of professionals that keep the world turning. Sounds extreme? Well, guess what? It's the facts. So why should trading be so easy? The end justifies the means. We need to work hard for it. So if you had a losing day, pick yourself up and remind yourself why you're in this. If things have been tough for a while, go back to the drawing board and figure out what you've done right or wrong. If you've had a good spell, stay humble and focus on consistency. Make sure you keep your eyes on the long term and not the short-term wins. After all, this is a marathon, not a sprint, but most of all, beyond anything else, don't lose your enthusiasm and don't give up. Your story starts here. Stay dedicated. This is just the beginning.
Have you been thinking about getting into Forex trading? Forex trading opens up a world of opportunity for those who know how to do it properly. You can experience financial freedom and reap tremendous rewards for your trading skills. Unfortunately, many programs make big promises and throw students into the trading market without the proper knowledge and expertise to succeed. Fortunately, there is a solution. Great White FX Academy is the best place to start your Forex trading journey with the tools, resources, and education necessary to help you thrive in the market. Great White FX is an online Forex training platform that provides technical training that will help you succeed. It is of the utmost importance to have a proper qualitative education to participate in Forex trading, and that is exactly what Great White FX focuses on. You can reach us on Facebook at Great White FX and Forex Educational Academy, on Instagram at Great White FX, on Twitter at Great White FX, or call us at 234-803-930-61888.
Hello. Good evening. If you can hear me clearly, please, and see my screen, please, can you type in yes? Somebody seems to be eating. Can the person please? If you have a noisy background, please take care of your background. So, okay, if you can hear me clearly, everybody is on mute because some people have noisy background and they're not going to do anything about it. So, if you can hear me clearly and see my screen, please type in yes. If you can hear me clearly and you can see my screen, please type in yes. Okay, good evening all. Good evening. Good evening. You're welcome to today's open house training. You're welcome to today's open house training with Great White. Due to everybody is on mute, so if you have a question, either you type it into the message box or you raise your hand. I think there is an icon that would show your hand is raised. Then I would be able to attend to your question. So today, what I'll be taking you on is how to plan a trade. How to plan a trade, because it is very, very vital. I'm going to use MT4. I'm not going to use Trading View. I might use Trading View much later, and I don't intend to take so much of your time. It's going to be a short training. So I'm going to clear my chart of object list. I'm going to clear everything off my chart. So let's use a pair like the USD JPY. The first thing you come to your chart, because one thing with trading is a lot of people got sold, let me say a dream, yes, because it happened to everybody. You got sold the dream of everything going to happen so magically, you don't need to do anything and money will just start flowing into your laps. But the reality is it doesn't work like that. For everything you need to succeed in life, there is always a responsibility associated with it. For instance, if you ask for a car and a car is given to you, the responsibility attached with a car is maintenance, fueling, and all the other issues. So having a car doesn't solve your problem. There's lots of responsibilities coming with it. So you need to be able to live with those responsibilities and accept it. The money to be made in Forex comes with a lot of responsibilities. You must do your own work. You must be accountable. You must be disciplined. You must be patient. A lot of people think they are patient and they are disciplined until they start trading and they find out that they are nowhere. You're just basically nowhere. Okay, so we need to put that into our trading schedule. So looking at this now, and again, you must understand one thing. The market is designed and engineered to deceive and to manipulate to an extent. The market is not basically your friend, but that does not mean it's your enemy. The market will only reward you if you are 100% disciplined. That's when the market will only reward you. So if you get a chart, I always say the first thing you do is when you're looking at the chart is first you try and determine the trend. When you get an idea of where the trend is on the chart, it helps you with your trade. So there are several ways of finding out trend. But to me, one of the best ways is I will just say you switch to a line chart. When you switch to a line chart, you're trying to find out what is going to most likely happen on the right hand side. And to do that, you need to be aware of what has happened on the left. Because most times when they tell you everything that will happen is on the chart, at first it will be difficult, but with experience and time, you get to see it clearly. So when you switch your chart to line chart, this is what I normally do first. I ask myself, where is price? This is where price is. The next question I ask myself is, where are the levels of importance on the time frame I'm looking at? You understand? Because I found out one thing in trading. If you try to have a bias, your ego is going to come out to play. What do I mean? Nobody likes being wrong. But the market is a pro at making sure you are wrong. And to survive in this business, you must learn to be wrong gracefully. So, one thing I don't do is I don't try to have a bias that it is bullish. Because if you have that at the back of your mind, even when they start showing you counter signals, the only thing you're going to see is what you had initially programmed into your mind. So you must be as fluid as water to survive in this business. So the first thing I ask myself is the prices. Where is my most recent high? My most recent high is I don't use the horizontal line, I use trend lines. This is my most recent high. Next question I ask myself is, is there any other high after this? Yes, there's another high after this. The next question now is, where is my most recent swing low? My most recent swing low is here. Do I have any swing low before this? Yes, because I have something here. So when I'm done with this, what do? I switch back to my candles. This is my most recent thing. And one thing I've noticed is that when you do this, because you use line chart, the line chart only pays attention to close prices. The line chart only pays attention to close prices. It doesn't show you the highs and the lows. So, but if you look at the line chart, by mere fact that this area has been taken out, you can see it's kind of a cluster zone. As you can see, one thing with the line chart is that it helps you see a lot of things. You could see it showed you this is a zone and price has broken above it. And now price seems to be dropping back down. So if price is dropping back down, where would its most likely target be? You have this area, but if you look slightly to your left, you find this prior area here. Excuse me, let me extend this line a bit. You have this prior area here, before here, then here. You switch back to your candles. That's what you have somewhere here. Then, because this is a daily time frame, and what I normally do is when I have something like this, I normally zone it out. So I now have a resistance zone here. I go down to my 4-hour time frame because most times lots of people are intraday traders. Because you might be surprised what 20 to 30 pips can do for you consistently on a daily basis. It will improve your confidence and boost your level of trading. So when I switch to my lower time frame, the most important thing is when you're doing this, you're not trying to see the candle. You're just trying to find out the most important swing highs and swing lows. And one other thing, the line chart can help you pinpoint areas that you can draw your trend line from. Like for example, I have this swing low and this swing high. Because to draw a trend line, a support trend line, you need a prior low and a higher low. There is the first loop, there is a higher loop. When you connect the two of them, you get the trend line. That's been taken care of because the trend line is a form of support and resistance, but it is what you call a diagonal support or resistance. So if I look at this, I ask myself, do I have any other prior loop here? Yes, I have. One thing with the line chart is these areas on the line chart are very, very important. I have something here. So I switch back to my candle. So basically, I finished marking out this chart. One thing I know is the trend is bullish. How do I know the trend is bullish? If I go back to the daily time frame, price has been making a series of higher lows, as you can see, but these highs here have not been taken out. But for at this point in time, price is in an uptrend. The breakout of price out of this range area here shows that they are bullish. Okay, if I go down to my lower time frame as a 4 hours, if I switch back to my line chart, you can see series of higher lows and higher highs. So which shows you that for now, this trend is bullish. Then if I look at this chart again, I can then see something here. So now, what's my question now? What is price most likely to go to? Price might most likely find support here. So now that you've done this marking up, the next question you ask yourself is, how am I going to take my trades? You only take trades from the area of importance that you've marked out. And to do that successfully, you need to understand your candlestick patterns. If you don't understand your candlestick patterns, you cannot execute this properly. You cannot. It just won't work out properly. So you need to ask yourself, where is price now? Price is bearish to this level. Because someone who doesn't know what is here might see this bearish candle and might execute a sell position, only for price to get to this level and turn back up. Do I have any questions so far? Do I have any questions from anybody so far? Do I have any questions from anybody so far? Any questions? Any questions? Do I have anybody with any question? Any question? It's one thing to understand, it's another thing to implement it. That's where the problem comes in. Because this system is so simple, a lot of people will not follow it. The question is, a lot of people will prefer to follow something that looks like this. So a lot of people will prefer, if their chart is looking like this, they'll be happy. If their chart is looking like this, they'll be very, very, very happy. They will know, yes, I'm a trader. Comment. Your chart doesn't need to look like this before you make money in this business. A lot of people, until their chart, if you try to teach them using this, they will not believe you. But if you try this, they will pay attention to you. Because you have how many indicators? 1, 2, 3. One thing you must understand with indicators, yes, indicators are good. But the indicator is a shadow of price. It is after price has moved that the indicator will show you. Most indicators are lagging. You know, when I started and they used to say indicators are lagging, you won't understand. It is until price has done what it wants to do, the indicator will then tell you this is what price is doing. And if you don't understand it, you'll be looking at an indicator when the move has gone. By the time, like, let's look at this now. Let's look at this. This is a daily chart. Let's go to the 4-hour. If we look at this chart, I'm not knocking any indicator. Don't get me wrong. I'm not knocking any indicator. Like now, if you look at this indicator, everything is bearish. Everything is bearish. Looking at it, everything is bearish. You can sell on this candle. But where are you going to sell it? You're not too far from the support level. You didn't do the markup. You're looking at the indicator. So the indicator is going to tell you, because everybody is pointing down, which means that price will continue going down. So you're going to take a short position. And when you take the short position, what will happen? This is what is just going to happen. When you take a short position, this is just what is going to happen. Price might just drop like 10 pips and then swing against you. These are some of the things you need to be aware of. So once you've done this, the only thing you now need to wait for is at this point. Since this is a 4-hour time frame, you drop to a 1-hour chart. That is where you'll be looking to execute your trade. So when you come down to this chart, you'll be looking for a bullish setup from here. And if you take the bullish setup now, the question you ask yourself is, where will my target be on this 1-hour chart? To do that easily, you switch back to your line chart. When you switch back to your line chart, you find out that you have a swing low here. So if price gets down to this point here, and you take a buy, your first TP will be almost 30-something pips away at this prior low. Because price based at this level, it ranged, then broke below. If you go back to your line, to your candles, there's a possibility that if price hits here, it may come back to retest here, because here was what you call prior support. And we know that once support is broken, most often it becomes resistance in the future. So there's a possibility that price will run back here. But the prevailing trend from what you can see is a bullish bias. And you know that in an uptrend, what you're looking to buy are dips. In an uptrend, reversal patterns, that's bearish signals, you need to take easy. Somebody raised his hand.
Yes.
Hello, sir. Ask your question.
Yes. My question is this:
Mm.
you mark the place the price will go back to if he bounces away from that support. And me, I would have before you go to that area, I would have taken the one lower to it. There is a
Which one?
yes. Go to your left. Go to your left a little. Just go to your left.
Is it here?
Aha, there. Yes.
I
would have taken your hand there.
Here.
Yes, exactly.
Yes, it's not bad.
I would have taken that as my first TP.
Yes, it's not bad. There's nothing there. This can be TP1, but the most likely place they will come to is here. You get, this is the most likely place they will most likely come to. But it doesn't mean that what you said is wrong. Understand me? What you said is practically right. So what you do is, if you take a long position here, this place can become your first TP, 25 pips away. The second one will become your TP, 42 pips.
Exactly.
No problem. You're in order, sir. Any other question?
Thank you very much.
Okay. Any other question? Any other question? Okay, let me show you a little bit of okay, somebody is asking a question. Any other question? You see, it's one thing to know. If you don't implement what you know, you're as good as being where you are. So let me to show you how this same system is basically what I used to treat. So let's look at 19th. And this is the 19th course. So let's look at AUD USD. This was AUD USD. This was before the chart was pulled up. Now let's look at AUD USD. Let's open this in a new window. Okay, so if we look at this, you see what happened here? Let's zoom in a bit. Let's zoom into this a bit. It's the same system I use on my chart. You see what happened? You see when price broke below it, this zone, do you see the retest? Now, if you look at it, okay, it has done this. You see this zone that price broke below? You see the drop? If you didn't know where this level was, you would have sold on this candle. And what the price do? Price would have rallied back up to retest this prior area. Do you see? This is what happened. This part of the analysis I did last week. You would have sold here, and this move would have panicked you. By the time the pain will be too much to take, you will exit. And not long after that, because these are 4-hour time frames, it gave you a bearish engulfing candle. And after that, what happened? Price continued to go down. And when it came down to that same area, it bounced. So you see why you need to get this right. To that same area, it bounced. And then it was after that bounce that they broke this area. So now what they have done is they retested and they are looking at further down move. Let me see if I'll find another pair. Let me see if I'll find another pair to show you guys. Let me see. This what pair is this? This dollar index. Let me see. Because you need to understand most of these things. If you don't get it right, your trading will always look. Your trading will not look. Your trading will not look okay. You will always keep having losing trades, and you will keep asking yourself, what is the problem now? Why am I losing this trade? But they say if you see bearish engulfing candle, that you should sell. I sold now, and why is price going back up? Okay, let me go back to this page. So now this is dollar index. If we look at the dollar index, I didn't mark this out, but let's look at it here. Why did price drop when it got to this area? Because this area was prior resistance, as you can see. It couldn't break it. Then what happened? It dropped. Where did it drop to? Into this same zone. And let's look for another pair. Let's look for another pair. You should learn to take trades only when price is at your area of importance. If price is not at your area of importance, don't be unfortunate to take a trade. Just don't do it. Don't be unfortunate to take a trade. It will just not work out for you. Let's see. Let me look for this is Euro AUD. Let's zoom in into Euro AUD. It's Euro AUD. Do you see this? Do you see what happened here? You see as price was rejecting from here. This was the zone the market was aware of. And do you see what happened? They broke above it. Somebody who is aggressive could have taken a long position from here, but I would not have, because I'm always wary of price inside a resistance zone. And you now see what happened. It gave you a bearish engulfing candle. This is a reversal pattern. But where did it reverse into? To test this prior area. This is what you call a break and retest. So if you took this short position, you just comfortably sold into a support area. And let's look at this pair on the chart. Let's look at Euro AUD on the chart. Do you see what happened? Do you see that candle? That candle is what we have here. Do you see this candle? Let me pull this up. Do you see this candle? You see what happened after that? They came back to this area, they dipped a bit. Then now, where's your target here? So it's just this simple. The only thing you need to know is this is a bearish engulfing candle, but it is a trap. So that's just the way it is. Learn to plan your trade and execute your trades only when price is at your areas of importance. Don't be unfortunate to take a trade just from anywhere because you see the candle moving. Because this is a 4-hour chart. If you look at this on the 1 hour, it gave several sell positions. But if you took this trade, you will not go too far. Let's measure it. Although some people will say, at all. But at all in the wrong run will not get you anywhere because you'll be making a lot of mistakes. And as you can see, this is a morning star formation on the 1 hour. So you see when I say, if you draw your time frame, like now, on the 1 hour, they gave you an evening star formation before the drop. So if you saw this trade, you could have taken it, but you know it is a retest of a broken zone. Now they gave you a morning star formation, and after that, they pulled up. That move up was what, how many pips? From here, you know this AUD USD is pretty slow. That's like 41 pips. That's something you can take 2020. That's 40, you're done for the day. And because you know the prevailing trend, that they are bullish, you would not want to take a short position without being careful. And you see they dropped. I had my positions here. This is where I had my positions. And this is the target. This is the first target. When you take this type of trade, what I normally tell people, what I normally tell some of my students is very simple. Let me look for AUD US, Euro AUD. It's not here. Let me pull it up. What I normally tell some of my students is, because some people say, where do you place stop loss? Some people have problems with stop loss placement. What I say is, you go to your indicator list on your MT4, go to Bill Williams, look for fractures, and place the fractures. Then you go to that particular time frame of interest. So if you look at this area, I normally say, if you were, this is the level here. This is your last fracture. You place your stop loss 5 or 10 pips below here. Below the fracture, not below the low. Below the fracture. You see, they came for hunting. Do you see the hunting? If you have placed it directly at this fracture low, they would have taken you out and they would have continued in your direction. And it is this type of things that will reinforce the habit of not putting stop loss so that they will not take you out and continue your direction. And the day it is going to happen, they would take you out. They will not do what they did here, but they will continue in the opposite direction. And because you didn't take a stop loss, your loss will be larger than you intended it. Your stop loss is protection. Nobody will drive a vehicle without a brake. And nobody will go somewhere and park his vehicle without appropriate security measures being taken. If you do that, then why would you put your money in the market without appropriate security measures being put in place? Somebody's raised his hand. Sir, you are...
Yeah. Hello, okay. Good evening.
Good evening, sir.
Please, sir, can you take that stop loss placement again? I'm sorry, I missed it when you I think it was pretty fast the way you explained it, but if you can just take me back, I'm taking notes so that I can just write it down.
Okay. Okay.
Thank you.
When you look at the area you intend to take the trade, first, before you use this, you must have done your markup. You must know where you are. Don't be unfortunate to use this just anyhow. It will not work for you. Now, let me use this trick. To use this, you need to use your fractal. You get. You go to your indicator list. You look for Bill Williams. That's on MT4. I've not seen fractals properly on TradingView, but I'll still check. It might be there, but I'll still check. You go to Bill Williams. You pick fractals. When you pick fractals, you can change the thickness. This level here will change the thickness. Then here will change the color. You don't do any other thing. You just click OK. When you click OK, this is not very bright. Let me make the color black and make it slightly bigger so everybody can see it. So now, I don't like it this big because it disturbs my eye, but you use what works for you. So first things first, you wait for price to get here. And it doesn't mean you become a monitoring spirit. There are easier ways of placing it, monitoring this without actually being physically there. You use what they call price alert. MT4 has it. You right click. Because the market is closed, it will not appear here. If you go to my YouTube channel, you will see videos on how to use price alert. Or if you Google on YouTube, you find out how to use price alert. You place a price alert here so that you can go and do something and plan your trade around the time price gets there. So if price starts getting to this place, an alert will trip up to draw your attention. So when you come to the chart, what you'll be waiting for is a bullish evidence. Don't take it blindly. Once you get the bullish evidence, assuming the bullish evidence shows up here, let me use this chart now. Like here now, let me go to this place. Price has shown up, this is where the level is. Let me put the level. Level is somewhere here. Price has come to this level. What you would then do is, if you take this trade maybe here, because you know this is 1 hour, you can drop to 30 minutes. If you drop to 30 minutes, you still see the same thing. You still see the same entry. You see a good entry. So once you see this pin bar, you need a close above the pin bar to take the trade. And the close above the pin bar happened on this candle. But it didn't take off immediately. So what you do is you look for the last swing low. Assuming I took the buy position here and I didn't exit, price came back here. I will take 10 pips from this low. If you move your cursor there, your cursor will show you is 62.33. 10 pips there will be 62. Let me see. 10 pips below will be 62.22. And that will be just somewhere here. You could see they came very, very close to it. So you can do 10 or 15 pips. You get, so even if I took the trade here, this stop loss is 36 pips. Or you take the trade here. If you take the trade at this candle, your stop loss will go 10 pips below this candle. And that would be, let's find this low, that will be 62.11. Your stop loss will be 62.11. That will be somewhere here. You take the trade here, 45 pips. You're already close to your first TP. You can use 20 pips because it's not yet there. And see, it's just very, very close. So these are just some of the little things you need to, because because one of the things requirement to think as a trader is to accept the fact that you can be wrong. When you accept the fact that you can be wrong, a lot of things become easier for you to endure. So you just don't put a trade and think that because you put the trade, it's going to work forever. No, it doesn't work like that. It just does not work. And as you can see, on the 30 minutes, this Euro AUD seems to be ranging, as you can see. So since you know the prevailing trend, what you need to do is you wait to see what happens here. And there's one other thing with support and resistance. They tell you the more times a level is tested, the greater the potential of that level. And I'm telling you, the more times a level is tested, the greater that level is going to be. That will be topic for another day. The more times, 1, 2, 3, 4. If they come back to this place again, you need to be careful because they might break it and they might not break it. These are things you need to be aware of. So that ends our class for today. The recording of this video I will post online on YouTube, so you could go and get it. So the 6 weeks intensive masterclass is starting on Monday. That's the 23rd. If you've not registered, you still have between now and Monday to register. If you know somebody, because basically what I've taught you now is what I'll be teaching those in the 6 weeks in the intensive class. So if you've not signed up, you could. We have between now and max Tuesday to sign up. So if you wish to get across to me, these are my handles, my social media handles, or you could chat me up via WhatsApp on this, or you send me a message on Telegram. So I thank you all for taking your time to attend and wish you all a beautiful night's sleep. Thank you all for coming.